Welcome to another episode of Equity Street, where we provide the roadmap to property wealth. We're answering the questions of real estate investors across the country, and of course, I am joined by one of Australia's leading property experts, Matthew Bauer, to answer your questions. So let's get straight on into it. This question comes from Tamika, and she said, Matt, how likely is a real estate market crash?
Highly unlikely. That's I'll put it right out there, Tamika, and say it's highly unlikely. And contrary to, I guess, the media headlines that we continue to see every cycle, whether it was around GFC time or COVID times or throughout the last 2 years and even again now, drops of 20, 30, 40%, and in some cases I think you saw some economists quoting 50% market crash. It certainly just isn't going to occur. And if you look back historically for the past 40 or 50 years, yes, the property market in Australia has gone through its peaks and troughs, and those repeating cycles. I think the most it's ever reduced when we look at a consolidated marketplace, maybe somewhere between 6 and 8%, maybe 10% in some circumstances. But I always look and say, well, if I've just been riding the wave where in some instances or some markets I've seen a 100% increase, if it drops by 10%, well, I'm still well and truly in front. And I think the way the market and the property cycles in Australia are structured from a finance and a lending perspective and a supply control aspect, that there's always this considered soft landing or controlled landing, considering how significant the property industry is in terms of its importance to Australia's economic activity, and I guess also we could slant it towards the political landscape, to keeping it relatively stable without having a crash landing at all. So I can't see it happening.